Welcome to the News El Salvador SV podcast for this Monday, March 16th, 2026. In this space for conversation and reflection, we explore current global events together, the stories you need to know. You can support this project via PayPal or through crypto by leaving a contribution in Bitcoin, Ethereum, or, if you prefer, Solana, now enabled. You can find the links and addresses in the description. Find US on your favorite platform, Spotify, Amazon Music, Apple Podcasts, TuneIn Radio, or YouTube. We are on almost every platform. Share our podcast with your friends.
Absolutely. It's great to be here for another deep dive.
Yeah, and it's really fascinating how invisible the threads connecting our world are until one of them violently snaps.
Right.
Like you wake up, you pour your coffee, and you might not even realize that a single drone strike halfway across the globe in the dead of night is it's already rewriting the value of the money in your wallet.
It's the ultimate butterfly effect, really. But instead of a butterfly flapping its wings, you've got, targeted munitions hitting critical energy infrastructure. And the hurricane that creates, it doesn't just hit one post, it crashes into every financial ledger and every central bank on the planet.
And that's exactly our mission for you today. We are looking at a stack of intelligence reports, some very fresh market data, and regional legislative updates to map out this exact domino effect.
There's a lot to unpack.
There really is. We're going to trace how a severe military escalation in the Middle East is currently sending just absolute shockwaves through global energy markets.
Yeah, the physical destruction there is wild.
And we'll explore how that destruction is forcing the United States Federal Reserve into a very tight corner. Plus, how it's putting Bitcoin through an unprecedented stress test.
A huge stress test, yeah.
Right. And finally, how these extreme macro pressures are forcing massive political shifts across Latin America, culminating in some truly historic, rigid constitutional reforms right here in El Salvador.
It's a massive geopolitical and macroeconomic puzzle. And, every single piece is moving in real time right now.
So let's start at the epicenter, the Middle East. Looking at the timelines and the sheer scale of the targets, we are seeing a severe escalation that is physically destroying the infrastructure that powers the world.
The literal fuel of the global economy.
Exactly. The facts on the ground are stark. So, Israel attacked the South Pars gas field in Iran. And for context, this is the largest gas field in the world, right?
And it's shared with Qatar, which makes it even more complicated.
Right, shared with Qatar. And in response, Iran initiated a really strict physical retaliation.
They went straight for the economic arteries, no holding back.
Exactly. They hit Qatar's LNG plant, which happens to be the largest export plant in the world, by the way. And they didn't stop there. They launched drones at Kuwait's major refineries.
Which is a massive escalation in itself.
Massive. We're talking about the Mina Al Ahmadi refinery, which produces 730,000 barrels per day, and the Mina Abdullah refinery, producing 454,000 barrels per day.
That's well over 1 million barrels just gone.
Gone. And Iran also launched direct strikes into Israel, hitting the Tel Aviv airport and a building in Ramat Gan. And that tragically resulted in the first 2 civilian deaths in Israel from Iranian attacks since March 9th.
Wow.
Meanwhile, Israel is heavily bombing central Beirut and has announced plans to destroy all bridges over the Litani River in Lebanon.
So they're trying to completely cut off Hezbollah.
That's the stated goal yet.
The physical bottlenecking of supply here is what you really have to pay attention to from a financial perspective.
Right, the market impact.
Exactly. When you take well over 1 million barrels of refined oil off the board in a single day, the markets don't just react, they panic.
Because it's not just gas for cars.
No, you're removing the raw materials needed for aviation fuel, global shipping, even fertilizers.
And the political rhetoric is completely matching that physical intensity right now. Donald Trump stated that the United States had no knowledge of the South Pars attack.
Which is a significant distance for the United States to put between themselves and Israel's actions.
Right, and he explicitly warned that if Iran attacks Qatar's LNG plant again, the United States will completely destroy South Pars.
Just completely level it.
Yeah. And on the other side, Iran's President Masoud Pezeshkian promised that, quoting here, "Without a doubt, a severe revenge awaits the terrorists."
Heavy words.
Very heavy. And Iran's Foreign Minister Abbas Araghchi stated that the presence or absence of an individual does not affect this structure. He also warned that the United States was dragged into this by Israel based on a miscalculation.
Those are very definitive statements, and the financial markets, they immediately priced in that severity.
How bad was the spike?
Well, following these strikes, European gas prices skyrocketed by up to 30%.
30%, just like that.
Just like that.
Yep.
And Brent crude oil violently spiked, reaching as high as $116 a barrel.
Wow.
Yeah, and Saudi Arabia even reported attacks on 2 of their Riyadh refineries. They issued a very stark warning that, quote, political responses are available and non-political ones are also on the table.
So everyone is threatening direct kinetic action. But wait, let me stop you right there.
Yeah.
Because this is where the intelligence and the markets severely disconnect.
Okay, I guess so.
So, the Director of National Intelligence for the United States, Tulsi Gabbard, just testified. She explicitly stated that Iran's nuclear program was shattered in June and has not been rebuilt.
Really?
Yes, which directly contradicts claims of an imminent nuclear threat. So, as a news analyst looking at this, Tulsi Gabbard says Iran is shattered and not an imminent threat, yet the energy markets are reacting as if we're on the precipice of World War III.
Right.
Are global commodities just pricing in raw, irrational fear? Or are they seeing a physical supply chain destruction that the political intelligence briefings are, deliberately downplaying?
That is the crux of it right there.
Yeah.
I mean, the short answer is that commodity markets do not care about political posturing. They care about math.
Okay, break that down.
Sure, intelligence briefings might suggest the nuclear threat is neutralized, but the oil and gas markets. They're looking at burning refineries in Kuwait and damaged LNG terminals in Qatar.
The physical reality on the ground.
Exactly. They're pricing in the reality that molecules of energy are literally being evaporated from the global supply chain. When a refinery that processes 730,000 barrels a day goes offline, that's not an intelligence estimate.
Right, that's a hard fact.
It's a mathematical deficit that has to be priced in immediately. Because if it costs more to move a cargo ship or fly a plane, the price of everything on that ship or plane goes up.
Which leads right into the macroeconomic nightmare.
Oh, absolutely. That physical shortage lands right on the desk of the United States Federal Reserve. These oil and gas price spikes are severely tying the hands of global central banks.
So what did the Fed actually do this week?
The FOMC just held interest rates steady at 3.5% to 3.75%.
They held them.
Yeah. Jerome Powell specifically cited the uncertainty of the Middle East war's impact on energy prices. And you have to look at the United States Producer Price Index, PPI. It already jumped 3.4% in February.
Yeah, and Powell even said, quoting him here, higher energy prices will drive up headline inflation, but it is too early to know the extent and duration of the potential effects on the economy.
Right. Which is basically central bank speak for, we are completely trapped.
Because they can't lower rates if inflation is rising from oil prices.
Exactly. What the market is absolutely terrified of right now is stagflation.
High inflation and stagnant growth.
Yeah, that toxic combination. The United States labor market is showing clear signs of slowing down, but inflation is remaining incredibly sticky above that 2% target.
So what's the expectation for the next meeting?
Well, right now, 97% of market participants expect 0 rate cuts at the upcoming April 2026 meeting. The 2-year United States Treasury yield sits at 3.71%, with a 2-year inflation expectation of 2.27%.
So to put this in context for you, while the European Central Bank is expected to hold rates at 2%, analysts like Arthur Hayes believe the United States Fed will eventually be forced to lower rates just to fund the conflict.
Yes, the stealth printing concept.
Right, macroeconomist Lynn Alden talks about this too.
And we really need to unpack how stealth printing works from a financial perspective, because it's insidious.
Go for it.
When the government needs to finance geopolitical actions but can't, raise taxes without causing a public revolt, they issue more debt.
Which the central bank buys.
Exactly. The central bank creates new money to buy that debt. This raises asset prices, making the stock market look fantastic on paper, but it actively crushes the purchasing power of the everyday citizen.
Right, so your groceries get more expensive, your rent goes up.
Yeah, but your wages don't keep pace with the newly expanded money supply.
So you track the political pulse. If the United States is essentially forced to print money to subsidize foreign conflicts, while domestic jobs slow down, how long before the public recognizes that their monetary policy is being dictated by drones in the Persian Gulf rather than the American economy?
It's a ticking clock. When the average person realizes their shrinking paycheck is tied to a damaged gas field halfway across the world, it shifts from a foreign policy debate to a domestic survival issue.
It really does. Now, before we dive into how investors are trying to survive this exact scenario by fleeing to alternative assets, we want to take a brief moment to remind you that you're listening to a deep dive by New W's El Salvador SV. If you find this analysis valuable, you can support the project via PayPal or through crypto using the links in the description.
So looking at those alternative assets, we really have to look at traditional markets bleeding under this pressure first.
Right. The Dow dropped 700 points. The S&P 500 is falling. Even traditional safe haven gold dropped to $4,900.
Yeah, gold is dropping, equities are bleeding, but the asset passing the ultimate stress test right now is Bitcoin.
But it wasn't without some serious drama this week.
Oh, absolutely not. Bitcoin briefly fell below $70,000, hitting a low of $69,536.
What triggered that?
It was triggered by an early pioneer whale, an investor named Owen Gundon. They just dumped their remaining 650 Bitcoin on the open market, which is worth over $46 million.
Just offloading it all at once into a very fragile market.
Right. And that sudden shock caused massive liquidations across the crypto ecosystem. Nearly $592 million was wiped out in hours.
Ouch.
Yeah. Mostly that was over-leveraged long positions. People borrowing money to bet on a moonshot who got completely caught out by the sudden dip.
But then it bounced back.
That's the fascinating part. Bitcoin showed incredible resilience. It rapidly recovered back above $70,200 almost immediately.
Let's unpack this. Normally, a severe geopolitical crisis combined with a hawkish United States Fed would absolutely crush a risk asset.
Right, it should tank.
It's like Bitcoin was thrown into a Category 5 hurricane and barely lost a single roof shingle. What drove a recovery that fast when traditional safe havens like gold are exhausting themselves?
It's being driven by massive, sustained spot buying. We're seeing relentless demand from United States ETFs and heavy corporate accumulation by entities like MicroStrategy.
So they aren't trading the news, they're buying the asset and holding it.
Exactly. And furthermore, the leverage among Bitcoin bulls is actually very low right now. To put it in perspective, liquidating the price down to $68,000 would only affect about $450 million in positions.
Which sounds like a lot, but in context.
It's less than 1% of the $49 billion open interest in the market. There's no fragile house of cards ready to collapse.
So if gold is dropping and equities are bleeding, but Bitcoin is bouncing right back on pure spot demand, has the market fundamentally reclassified it? Are we watching Bitcoin graduate from a speculative tech stock into a true geopolitical safe haven asset in real time?
I genuinely believe we're witnessing exactly that transition. For a decade, the critique of Bitcoin was that it had never survived a high interest rate environment or a true global kinetic conflict.
And now it's facing both.
Right now.
Yeah.
The fact that spot buyers, large institutions, and ETFs in the United States are scooping up the dips indicates a structural shift. Capital views digital scarcity differently now. It's being treated as a sovereign-grade hedge against the exact stealth-printing currency debasement we just talked about.
That's wild. But if sovereign-grade assets like Bitcoin are how investors are protecting themselves globally, we have to look at how actual sovereign nations are protecting themselves locally.
Because the macro pressure hits the state level hard.
Exactly. Because when you look at Latin America right now, countries aren't just shifting their portfolios, they're drastically shifting their alliances and their internal laws to survive this exact macro pressure.
Oh, Venezuela is a perfect example of this.
Right, let's look at Venezuela. We just saw a massive political earthquake. Delcy Rodriguez dismissed Vladimir Padrino Lopez, who has been the defense minister for over a decade.
A very long time.
Yeah, and he was highly belligerent toward the United States and has been accused of drug trafficking. He's been replaced by Gustavo Gonzalez Lopez, the former head of the SEBIN intelligence agency.
And from an economic signaling perspective, the mechanism behind that shift is crucial.
Why remove a loyalist hardliner now?
It's a forward-looking signal. Structural damage from years of isolation and a destroyed currency takes decades to repair, but markets and international relations, they operate on signals.
Ah, so you think it's a play for the United States?
Shuffling the cabinet to remove an anti-United States hardliner opens the door for the Donald Trump administration to potentially negotiate future United States-Venezuela military or economic cooperation. It's a calculated attempt to invite capital back in.
It's a massive pivot born of necessity. And you look across the water to Cuba, and they are experiencing a severe energy and economic crisis, heavily exacerbated by the United States blockade.
How bad are the gas prices there right now?
Gas is almost $2 a liter there. Right now, a sanctioned Russian oil tanker carrying 700,000 barrels is heading to Matanzas just to provide basic relief.
Wow, relying on sanctioned Russian oil just to keep the lights on.
Yeah, and up in Mexico, the social fabric is incredibly tense. Thousands of teachers have initiated a 72-hour strike demanding labor improvements.
And the timing of that is, well, it's not an accident.
Not at all. They are explicitly threatening to escalate and disrupt the upcoming 2026 World Cup in June if their demands aren't met.
Economically, the whole region is a stark study in how different policies weather these macro storms. Look at Argentina, for instance.
What are the numbers looking like there?
Unemployment just jumped to 7.5%, and a massive 43% of their workforce is trapped in the informal sector.
43%. That's almost half the country off the books.
Right, and when half your population is working off the books, the state can't collect taxes, which means they can't service debt, which traps them in an inflationary spiral.
But not everyone is struggling the same way.
No, contrast that with Chile. Their GDP unexpectedly grew by 2.5%, compensating for a drop in their crucial mining sector with strong, diversified trade and investment.
But amid all this heavy economic and political strain across Latin America, there was this fascinating moment of cultural unity.
Oh, the baseball game?
Yes, Venezuela's baseball team just won the World Baseball Classic in Miami. They defeated Japan, Italy, and finally beat the United States 3-2.
A huge upset.
It was. Elsie Rodriguez actually declared a day of national joy, providing this brief, intense respite from the ongoing crisis. But as a news analyst looking at Venezuela ousting a fiercely anti-United States defense minister while simultaneously celebrating a massive cultural victory over the United States in Miami, it highlights a really complex duality.
It really does.
Can a country realistically negotiate an end to brutal economic sanctions simply by shuffling its military cabinet? Or is the structural damage from years of isolation just too deep for a quick fix?
I mean, the baseball victory is a psychological win. It boosts national morale, which is desperately needed. But the cabinet reshuffle is the economic reality. You can't pay down sovereign debt with a baseball trophy.
Exactly. Which brings us to a nation fundamentally restructuring its entire society to guarantee economic and physical security. We're zooming in closely on El Salvador.
This is a massive shift.
The facts here represent an absolute frontier in legal reform. The Salvadoran government has sent a massive package of legal reforms to the Assembly, fundamentally altering the juvenile penal law, the anti-terrorism law, and the penal code.
And the core change here is unprecedented.
It really is. The core historic change is this. Minors can now face life imprisonment if they're convicted as the author of severe crimes like homicide, rape, and illicit gang groupings.
That is a monumental paradigm shift for any legal system.
Because currently, these crimes carry 10 to 60-year sentences for minors. But under this new reform, minors will be judged exactly like adults. There will be no special juvenile procedures and absolutely no suspended sentences.
No leniency at all.
None. To quote the legislative update directly, the Constitution, Article 27, Clause 2, was just modified to allow for life imprisonment and awaits ratification.
But it's important to note, the government isn't just throwing away the key forever without a process. They've built a highly regulated mechanism called controlled freedom.
How does that work?
For minors sentenced to life, their case will be reviewed after 25 years in prison. For adults, the review happens after 30 years for a single crime, 35 years for multiple crimes, or 40 years for aggravated crimes.
So a judge makes the call after a quarter century, but based on what? Is there a specific transparent metric they use, or is it arbitrary?
Oh, it's heavily regimented. The decision is made by a judge, but it's based on very strict reports from the Regional Criminological Council.
What are they evaluating?
They evaluate the prisoner's psychological state, their behavioral evolution over those decades, and the mathematical danger of recidivism.
And if they fail the review?
If the judge denies the controlled freedom, the prisoner must wait 5 more years before applying again. And if it's granted, it's highly conditional. Any violation of the terms means an automatic return to prison for life.
As a news analyst, the sheer gravity of this is staggering. We're talking about taking a 16-year-old and placing them in a maximum security facility. They will be 41 years old before their brain and behavior are given their very first psychological review by the state.
It's a massive amount of time.
It's like sealing a high-pressure valve permanently. From a societal and economic standpoint, does implementing this controlled freedom review show that the state understands the heavy human and financial toll of a literal forever prison? Or is this just a legal workaround to satisfy international human rights observers?
Honestly, it's a calculated balance of both. Economically, housing an inmate for 60 years is an enormous drain on state resources, especially for a developing economy.
Right.
By implementing a review after 25 or 30 years, the state creates an incentive structure for rehabilitation while mitigating long-term fiscal liabilities. However, and this is key, the barrier to passing that review is so incredibly steep, requiring intensive psychological clearance, that it maintains the hardline, zero-tolerance security posture the government has built its entire reputation on.
So it looks good on paper, but remains incredibly strict in practice.
Exactly. It satisfies the need for a legal pathway to freedom on paper, while practically ensuring absolute deterrence.
Well, if we synthesize everything we've discussed today, the through line is undeniable. We're watching the invisible threads of a highly interconnected global ecosystem being pulled to their absolute breaking point.
Every single piece affects the other.
Right. We started with the smoking ruins of energy infrastructure in the Middle East, a physical reality that is directly dictating the monetary policy of the United States Federal Reserve.
And that macroeconomic pressure, the threat of stealth printing and stagflation, is forcing assets like Bitcoin to prove their mettle as a digital safe haven.
And at the exact same time, nations in Latin America, like El Salvador, are forging historic and rigid legal paradigms to lock down their internal security against the chaos. Everything is connected, and the stakes are universally high.
And it leaves us with a profound, broader implication. If we are entering an era where global energy is routinely weaponized, where central banks are completely trapped by geopolitics rather than domestic economics, and where nations are resorting to absolute lifelong measures to secure their borders and streets.
What is the ultimate cost of security? And are we, as a global society, truly prepared to pay it?
It's the defining question of the decade, really.
A heavy question to leave you with today for you to mull over. We thank you for joining us on this deep dive. You've been listening to the News El Salvador SV podcast. You can support this project via PayPal or through crypto by leaving a contribution in Bitcoin, Ethereum, or, if you prefer, Solana. You can find the links and addresses in the description. Thank you for listening, and we'll see you next time.